Yo, what's up team, it's Raphael again, and in this video I want to talk about how to identify and draw trend lines. Alright, so let's say the market is going down and creates lower lows and lower highs. What you want to do right now is connect all the highs. Essentially the idea is that price is just going to keep on coming and reacting to those areas and failing if the price is moving in a downtrend. Don't get me wrong, sometimes weird stuff happens where price slashing through the trend line before continuing falling down, and everybody gets confused by that little spike because it breaks above it. Essentially a trend is just looking at the overall direction of the market. Ask yourself, is it moving up or down? An uptrend is when the market is making higher highs and higher lows. We call it a bullish trend. A downtrend is when the market is making lower highs and lower lows. We call it a bearish trend. And then sometimes the market decides to go sideways, what we call consolidation or ranges, where the price is not really creating new highs or new lows. We are not going to talk about ranges in this chapter. We focus on trends and how to draw trend lines. The cool part about trend is they essentially the same type of levels we are drawing as horizontal levels, except we're just drawing them diagonally. We use the daily and H4 chart to do that, and all you do is you go to the daily and H4 chart and identify any clear trends within the most recent data. The most recent data is most relevant to us. We don't care about something that happened like 3, 4, 5 years ago as compared to something that been going on like the last few weeks. All we do is searching for significant highs and lows on the chart and connect them. In an uptrend you only want to connect the lows, and in a downtrend you only want to connect the highs. As we know, price bounces around with these candlesticks, and sometimes they leave these wicks or pin bars. How do we connect those highs? Do we connect them at the wicks, or do we connect them like this? Which way do we do it? And the answer is, there is no right or wrong way. Some people swear on connecting the wicks, and it's a great way to do it because you are probably not getting into trades too early. On the other hand, you might miss out on some really good trades that never move to the trend line that you have drawn. The way I do it is I just look at what price is doing, and then I draw the trend line to show where most of the data is hitting. I prefer a trend line where the price is hitting more than 2 times. Let's assume the market moves like this. You could draw a trend line like this, or you can draw a trend line like this. This is how I would do it. Whenever you make the decision to draw a trend line, ask yourself, where is price respecting more? Where's price bouncing away from that level? The more respected one should be the one you use for your trading decision. Let's take a look at an example on the chart. Now you can draw the level like that, or you can draw it like that. Which one is more respected, white or yellow? I would use the white line for my trading decision because it is clearly more respected than the yellow one, and so we delete the yellow trend line. Now you might draw some more trend lines on the chart like that. Please always zoom out to see the overall trend direction. I don't want you to take a buy position based on a short-term uptrend and an overall downtrend. Always zoom out and see the bigger picture to identify the overall trend. And if the overall direction is downwards, delete all the rest that confuse you. Let's check an example for an uptrend. Now you can draw a level like that, and you can draw it like that. I prefer the white trend line because it is the one that price is interacting with the most, and I would delete the yellow one in that case. What do we do when a trend line gets broken? Well, never buy or sell too fast when a trend line got broken, alright? Many times you will see the market breaks the trend line but still continuing to move in the overall trend direction after a few moves. Have the patience to wait for the trend to establish. Don't try to chase new trends. Here is an example on the chart. Take a look at the yellow trend line. Don't chase fresh new trends. Let them establish and give them time to form. Patience is the key. Don't chase reversals and stuff like that. We focus on breaks and retests in clearly established trends, and this is what we want to trade. You always want to use trends in confluence with horizontal levels, and you only want to take trades after they come to a clear horizontal level and diagonal level, and start reversing at both of those areas at the same time, because those are really where you are going to get some of your most high quality trades. You're only going to make a significant amount of money if there is a clear trend. So if the market is not clearly going upwards or downwards on the daily or 4-hour chart, then don't take trades. When the market is moving in a range, maybe you are able to catch good entries on the top or on the bottom of that range, but it is going to be super hard to make consistent profits because you don't have a clear direction. Trading with the trend is always a better idea. The trend is your friend. Take a look at the entries on Euro, New Zealand dollar. You always want to use trends in confluence with horizontal levels. Here's another example on the New Zealand dollar JPY. Whenever you draw trend lines, draw them wherever they make the most sense to you. If it is too confusing, delete the trend line, go to another pair, and do not trade the pair, because the best trades you're gonna get are the trades that are going to be so easy to see. Alright, that's it for drawing trend lines. Thank you for your time. See you in the next video. Peace.